Rob Subbaraman, head of global macro research at Nomura, joins in on the show right now. Rob, great to have you today on ET Now. Good to speak with you as always. We have this just for us all at ET Now. We have this newsroom indicator, and we often question each other on what's been the most used term or word or phrase for the year gone by. And for 2022, it's got to be inflation and recession, right? Just wanted to understand, where do you think things will settle down and whether they will at all when it comes to inflation in 2023?
It's a lot of uncertainty. Firstly, it's great to be back. I would say the market is really hoping that inflation starts to fall away quickly in 2023. I think the jury is still out, and the risk is that early in 2023, so Jan to March, inflation is still too sticky, too high for the central banks really to give any indication that they're willing to cut rates. That plus the growth outlook darkening, I think is going to be a bit of a challenge for markets early in 2023. As we get into the second half of 2023, I think the outlook brightens, particularly for EM and particularly for Asia.
So where do you forecast policy rates to peak at? Because, going by the Fed commentary this time, it doesn't seem like that they're quite done yet.
That's right. So as I said, it is going to depend on the inflation outlook, I think, more than anything else. And the derivative of that is really wages growth. The view we have at Nomura is the Fed will raise rates by 25 basis points again in February and 25 in March, and that will be the peak. So we're looking for a peak of 5%, which is actually a little bit below what the so-called dot plot suggested a few days back.
Rob, good to have you on our show. Just wanted to understand the outlook on the US dollar as well, because it has been fairly volatile to say the least. Given that the Nomura view is that you guys are not convinced on being outright short on USDs, what would be the rationale there?
So we think actually in early 2023, there could be another bout of risk aversion as recession becomes clearer in US and Europe, and markets kind of hope that central banks will come to the rescue, but we think it's probably too early for them to do so. So that we think will create some risk aversion and some repricing away from risk assets. That we think will be kind of dollar positive. So you think about the US dollar smile, on the one side, it's interest rate differentials. On the other side, the dollar tends to do well when there's a lot of global growth concerns and risk aversion. It might be moving to that other side of the smile where the dollar does reasonably well early in 2023.
Also joining in the conversation. So you talked about what the expectation is with respect to inflation around the world, plus what Fed is expected to do. But back home for India itself, what do you expect in terms of the growth outlook going forward? Plus, with respect to the RBI action, do you expect that the rate upcycle is more or less over, or at least towards the fag end of it?
So, firstly, on the growth outlook, we do think it's going to get a bit more challenging for India. We think that the best is kind of over in terms of growth, and we are going to see growing headwinds. One particular one is external headwinds. We do think Indian exports and Asian exports are going to turn down quite sharply, and that will have some knock-on effects on CapEx. The second headwind is from just simply tight monetary policy weighing on domestic demand. And the third one is the inflation and the squeeze on profit margins. So the reopening play and the benefits from that are starting to give way, we think, to these three headwinds I talked about. And that's why we have growth slowing quite noticeably next year. For the RBI, we do think they're almost done. We do think there will be one more rate hike of 25 basis points in February, and that will be it. It's getting to be quite a close call. It's possible that they don't even hike then, but we think at the margin they will go in February, and then that will be it. That will be the peak rate. I would say, I sound quite negative on India. That's quite near term in Q1, maybe a little bit into Q2. But when the dust settles and inflation the central banks around the world ultimately break the back of inflation, and we think that will start to become clearer around the middle of next year, that's when we think it will be Asia's time to shine, helped by low commodity prices, helped by, importantly, China's economy really fully reopening and starting to recover strongly again. And I think also helped by strong capital inflows into the Asian region, where the region has really been starved of very strong inflows for several years. So as we get into the second half of the year, we actually turn quite bullish on EM and particularly Asia.
So, given the fact that you are saying you're quite positive when it comes to Asia as a whole, not so much in India, should we infer that it's China which is likely to see large part of inflows? And also, if I had to ask you, what's the top tactical trade for 2023? What would be your recommendation?
So India is in Asia, right? When I said Asia, I'm including India, okay? So in the second half of the year, we do turn bullish, and I would say in particular where we are most positive is India and ASEAN out of the whole Asian region. There's a few reasons for that. So one is to do with the relatively better fundamentals and what we think will be higher growth rates in India, ASEAN versus other EMs. We think also the young populations, we think also the cleaner balance sheets, particularly in India, that we've seen, digitalization of the economies, and finally the China plus one story we think has legs. All these things will attract more capital flows to India and ASEAN. But I think we need patience. I think, as I said, there is a hump to get over where I think early in 2023, there is going to be a bit of a shock to markets where recession starts to happen in the major economies, and central banks are not quick to come to the rescue. But after we get over that and inflation does start coming down noticeably, central banks will be able to cut rates in the second half of the year. And that, I think, is when EM will start to shine. And within EM, we particularly like India and ASEAN.
To hear that, on that happy note, Rob, we'll see you again in 2023. Here's festival and New Year wishes from all of us.
Same from me. Thank you.